Good afternoon, everyone, and welcome to Stock Market Today. Ali Corm and Ed Carson here with a look at the action today and a little bit of a disappointing day given that impressive upside reversal that we saw yesterday, Ed.
Yeah, we tried it again. Came back a lot of the ways, and we were at session highs in sort of mid-late afternoon, then faltered a bit. Dow did better than others. Nasdaq's not so much, but want to take a look at a few stocks that did do well. American Express, nice action off of earnings. Mosaic, as fertilizer stocks come back, and Ovintiv, as energy led the way.
Yeah, it did. Okay, first, let's take a look at the major indexes. Here is the NASDAQ composite, finishing the day down about 2.3%. We had the S&P 500 down 1.2%, the Russell down about 0.8%. The Dow, the least hit today, down about 0.2%. So it was an inside day, it appears, Ed, but that was just because of the crazy range that we had yesterday.
Yeah, that was wild. And it was nice that we, at least we didn't close at the very lows today. As long as the market doesn't undercut the lows on Monday on the respective indexes, the rally attempt is underway. I mean, but you can also, it's hard to, we're not really breaking much of anything. You can do a straight vertical trend line, you still wouldn't be breaking it. So I have a lot of work to do. It looked like the initial reaction on Microsoft was negative after the close. We have the Fed meeting tomorrow. We have Tesla earnings tomorrow afternoon. Then we have Apple tomorrow night and dozens of other earnings along the way. So while we still have a rally attempt underway, there's still a lot of volatility, and I think investors should be careful.
Yeah, so there's a lot that could excite the market. There's also a lot that could disappoint the market. So a lot of unknowns out there starting to unfold, and tomorrow could be a huge day. And in terms of levels to watch before we move on here, Ed, I mean, seems like at the very least getting back above 14,000. Then we have the 200-day line, which is pretty far away still.
Yeah, I mean, the NASDAQ is lagging. I mean, right now it seems like the S&P and Dow are the ones that are, to the extent, leading the market, and really the Dow. S&P, not too bad, but below that 200-day line, that's key. There was a lot of sectors in there that are doing well, but the Dow almost was positive for a decent chunk of the afternoon. I mean, energy is leading, fertilizers are leading, banks and financials at least are not terrible. So, there's reasons to like that, but not a whole lot to be that happy about growth stocks right now.
Yeah. All right. Well, let's check in on some names. Here's a look at American Express. AXP, a strong day on earnings, up almost 9%, and some pretty heavy volume behind that move. Although I will say, even though today's gain was impressive, the base pattern that it's been forming is a little sloppy.
It's a little sloppy. There's a lot of slop out there right now, but even that, I mean, it's sloppy even on the left-hand side when the market wasn't quite as volatile. Yeah, that's something to note. I mean, at this point, I made some nice moves. You can, draw a trend line there, and it didn't quite get up to that. You could sort of draw it off of that short-term high that, there are some levels there that would be decent. The relative strength line is at least above a short-term high. So there are some reasons to like it, but yeah, there's a concern. And also, we've seen stocks have that good day on earnings and then they'll fizzle back. I mean, if the market slumps and, American Express, so maybe it's not going to tank like a growth stock, but, you do have to concern. It's not going to jump 9% every day. It's not going to have a positive earnings report every day to lift it. And we've seen it with other names. In a bad market, you can have that one good day in bad news, among generally weakness. But unless the market improves, this is probably not going to have, go gangbusters from here.
All right. Well, we'll put it on our watch list. 20% plus growth on both the top and bottom lines. So that's pretty good to see, and holding in a base here right around those moving averages. Let's also take a look at Mosaic in the chemicals agriculture group. It looks like an upside reversal at the 10-week line is taking shape, although we still have 3 trading sessions to go this week.
Yeah, so nice rebound. I mean, it was a breakout earlier this month. It's hard to see on this one because definitely on a daily there was more of a, there was an actual handle, so it broke out, then it fizzled, came down. From that perspective, it failed. When you get to sort of that middle of that salmon area, that's getting down to about 7 to 8%. on the, if you wanted to be, look, I understand if you didn't sell, it rebounded from the 50-day line. It's done it twice now. It closed above those areas. In this kind of market, you could argue, okay, well, maybe. I mean, because the RS line is coming back. It's definitely one to watch. And it's also encouraging because CF Industries, which was looked at yesterday, that one continued to do well. It wasn't leading a few weeks ago, but all of a sudden it is. And that was actionable, added to leaderboard today. So if nothing else, Mosaic certainly bolsters the fact that there's leadership in this area.
Right. Maybe investors were using that 10-week line to size their positions and are waiting for that decisive break for their final sell signal. But it's also why getting in on an
getting in on an early entry is important. So you just have to see how that goes. Obviously, it would have been difficult to hold in this case, go to round trip that as well. But in this kind of market, this is why it's tough to buy anything
or
because of that
today.
kind of action.
All right. And I guess either you or I cut out. I guess it was me this time,
I don't
Ed.
know. We'll see.
It was me this time. It was me. All right. Well, let's get Oventive in here before we both cut out again. So OVV, an interesting name in the oil and gas space. Yet another reversal off of the 50-day line this week.
Yeah. So you could say that breakout failed, though maybe you could argue this is now sort of forming sort of a handle, a high handle. It's messy. I don't want to, it's messy, but that's what the market is giving you right now in that kind of situation. And to keep that, the RS, and it's lagging. Yeah. It's lagging the other energy stocks, some energy stocks, but from the perspective of the S&P 500, this is hitting a new high. So it's a delicate balance in there because some of the leading stocks, they're gone. I mean, they're extended. It's hard to, look at those. So, but if it breaks above there or just gets above the old buy point, that could certainly be actionable, obviously driven by oil prices. And that is, oil prices continue to power higher.
That's right. Definitely an industry group or sector that we need to be paying close attention to with all that relative strength. All right, Ed, thank you so much for your insights today. And thank you all for tuning in. We'll be back with more tomorrow morning on IBD Live. So make sure you tune in investors.com/IBD Live, and we'll see you right back here tomorrow.